So thanks very much, clients that have turned up today. We've had a wonderful relationship with the guys at EasyCollect over a number of years. In fact, we use EasyCollect ourselves in Stratus. So it's we can speak from experience and let you know how amazing it is in terms of helping your business with its cash flow, helping put a structure around the way that you collect your debts. So yeah, it's an amazing solution. I think the guys at EasyCollect have over 350 businesses across Australia and the MYOB space that use EasyCollect, so it's widely used. And there's over 15 or so, around the 15 mark, of our clients that use the product. And yeah, it's an easy product to adopt, and ultimately just gives your clients a nice structured manner and understanding of how they deal with you when it comes to paying of invoices. There's a number of other features that these guys can talk about today, but yeah, I'll hand it over to the team, Graham and AJ, to run through what EasyCollect can do for your business. And please feel free to reach out to the guys or reach out to us if you have any questions or concerns or thoughts about how EasyCollect could work in your business.
Thanks for that, Michael, and thanks everybody for coming along today. It's always great to see such a great turnout of people that are interested. I come from a background of accounts receivable, so I understand some of the pain that you may be going through and some of the challenges that you have faced, especially over the last 12 to 18 months. Today, I'll be joined by our co-founder and CEO, AJ. My background is I'm an accountant by trade. Please don't hold that against me. So I actually understand everything about debits and credits, so I can talk intelligently to you about those sorts of things. I've been involved in ERP for a long time, but I've always held the view, and I used to say this to people before I actually got into sales, that a sale's not a sale until the money's in the bank. Up until that time, it's actually a gift. And if you could convince your salespeople of that mantra, then it would make life a lot easier. AJ ran a wholesale distribution business, and that's where he found the dilemma of having orders does not necessarily equate to having cash. And out of that, he came to design and build with the other co-founders the EasyCollect platform, which is what we'll run through you with it today. So just to preamble to what accounts receivable is, it's more than just sending out a dunning letter. It's more than just calling someone. It's basically, we look at 3 moments of truth, which will give you that real depth to your AR. And AJ will explain how we automate that and make life a lot easier for you later. But the first step is that best practice onboarding, and I'll get AJ to talk to that in a few minutes. And it really starts with getting your customers right from the get-go. And we've done a lot of research, and we find that anecdotally, there's still 70% of people that still onboard new customers by either using it used to be faxed, but it's now probably a scanned PDF, and they fill out your credit application form and they put on 3 credit references of 3 people that they've always paid, because you always make sure, because I've been an AP as well, you always make sure that there's 2 or 3 customers that you make sure you pay on time, and they're the ones that you use as references. And very few people actually use the intelligence that's available in the marketplace at the moment to actually validate what those people are saying. So you ring those credit applications, they all say wonderful things, and they say they want $10,000 worth of credit. And some of you may go, well, maybe not, we'll see how they trade for the first 30 days, but you'd be surprised how many companies just go, yep, no problem, they've got good trade references, we'll give them $10,000 worth of credit. And the first month they pay you on time, and the second month they pay you sort of on time. The third month it's starting to slip to 45 days, and within 4 months it's out at 60. And then they suddenly bring their account up to date, and you think, oh, that's good. And then they're asking you for an additional amount for credit. Can they raise it to 20 or 30,000? And you, without any reason other than, oh yeah, they've paid sort of on time. Because the salespeople are going, hey, we need this. I've got a big order for them. And then all of a sudden, 6 months in, they owe you 25 or 30,000, and it's 90 days and 120 days, and you can't get your money out of them, and they're on stop credit, and they're a bad customer. So at this stage, I'll pass over to AJ, and he'll actually show you how our onboarding works at the moment. Or AJ, did you want to leave that right to the end and just do it as one continuous piece?
Yeah, no, I think it's good. I can do that right now. And talking about onboarding, and welcome everyone, by the way, to the webinar. Thank you for your time, and thank you, Mike, for that introduction. The thing about onboarding customers the right way is that you can then have a process that you're chasing the right customers. You have less effort chasing, and you have less bad debts. Now, a lot of businesses, and if I talk about my previous business, it wasn't a very data-driven approach to onboarding. It was very much, I need the sale. I'm a business owner. I want to get that sale done. I want to make it as frictionless as possible. Give me your references. And as GB said, there were 3 references. I'd only ever call 1 or 2. I mean, I'd want to call 3, but 1 or 2 is good enough. And we'd open up trade credit. And then when they go bad later on, you wonder why. And businesses today, as GB mentioned, do not have a data-driven approach. And if you really want to solve this problem of late payment, because our mission is to eliminate late payment, we need to solve the problem of getting the right customers on board at the very start. Now, if you're in a business like a wholesale manufacturing distribution service business where you're onboarding and working with lots of customers, raising lots of invoices, you need to do that quickly, efficiently, and still get the sale in the door. So what I want to show you quickly, if you just stop sharing GB, I'll flick to EasyCollect, and then we'll come back to this as well. So I'll quickly flick across and show you in the EasyCollect system how we actually go ahead and do the onboarding. Now, what you can see here on my screen is the EasyCollect application. Now, the EasyCollect application, for those of you who haven't seen it before, is a web-based application. It connects to MYOB, XO and Advanced, and it very seamlessly, sorry, someone's trying to call me. Let me just minimize that. Apologies for that. Should turn off those for future reference. And what you have, because it connects seamlessly into your by the way, can everyone still hear me, JB? All good on the audio?
Yes, yeah, the audio is good.
Yeah. Because it seamlessly connects to your MYOB system, all the data is already in here, right? So that's a key thing. So there's no double data entry. I think Mike mentioned it's very easy to get up and running, and that's the first point, right? Now, on the actual onboarding, which is the very start of the process, a lot of businesses do not have a way to send digital application forms, right? And that's where you can start to really build a world-class AR experience, which is the topic of today's webinar. This is often the first interaction a business has with your brand. And you want that to be really, on brand, really professional, because they know this is how this business deals with me. So what we built for you through the platform is a way to not only make data-driven decisions on who you should work with and who you shouldn't work with, but we help you send digital application forms. So, for example, you can come in here and in less than 1 minute, copy and paste your T's and C's and your privacy policy, put in your company name, upload your logo and your colors of your business, and we will generate through the app for you in real time a credit application link that you can use and send to any of your customers. So, for example, here's a link. I'll open up a new tab, and what you can see here, if I just open it, here's an application form that you can put onto your website. If you have an e-commerce store, you can have it as part of your people want to sell your products or be a distributor, they can very simply apply for credit online. And what we built here is a smart credit form. So it's not just I'll put in any number in here. It actually has a smart ABN lookup. When you put in the ABN, it'll fill all the director details, contact information that are on the ABN database and ASIC database. So we've plugged into these different data sources, and then they can put in their director details, trade references, they can upload any documents, and within maybe 2 or 3 minutes, they filled up the whole form, right? So that is the first step of them saying, hey, this business is really professional. They've got an online application form. It's simple to use. It's easy. And once that's done, then you coming back into the EasyCollect system as, say, the finance manager or the AR manager or the AR person, and you can see all your applications forms that have been filled in. They could have different forms at different stages, and all the details here you can see have been completed, right? Billing address details, trade references, ID verification documents. And then what you get once you've done that is, before you do your trade reference checking, you spend time, we'll give you a credit score on the business. Now, the credit score is a plugin from a third-party credit reporting bureau that we've plugged into the system. So if you guys are familiar with credit scores, we plug into a company called Dun & Bradstreet, which is one of the world's largest credit reporting agencies. And we take all the credit score data from them and we present it to you based on the person that just filled up that application form. So you can see, you can verify. It says, according to Dun & Bradstreet, Mr. Arjun Singh is the director. Is that what they actually filled in their application form? So you can start to cross-reference this, information. And then with the actual scores, the best way to explain the score is this. If you think of an iceberg, right? Above the water is what you know about the customer in the public domain. You know what the trade references are saying. Anecdotally, this is, I think, how good the customer is. But below the water, how they're paying other suppliers in the market, how they're paying all the other creditors, we have that data. And that's all presented in this late payment score and the failure risk score. So if you think about it, those credit scores gather data from 10,000 different businesses all around the country, and it aggregates it into the score. So you can use the score data plus whatever you believe is the truth to make a decision whether you should extend credit and how much credit you should extend. GB, please feel jump in if there's anything you feel that could be added here. But it's really about giving you the data to make better decisions. The next step is you might say, hey, the score is really high, like a high risk score. I would need more information. You can then go ahead and actually get a credit report if you need to from within the app. Now, this is an example of a credit report. So Ilian Direct is Dun & Bradstreet in Australia. And you can see the information here. This is the risk of late payment. You can look at the analysis over 12 months. You can look at all the sort of PPSR, legal structure, who are the directors, who else has inquired on this credit business, who are the directors, and what is the cross-directorship? Very, very important. So, is David a director of any other businesses that might be transacting with you? Are they kind of, and that's getting more common now during COVID time where they'll be the same director of multiple companies and they're starting to, just wanting to trade under different sort of shell entities. And that can really burn you. So, these are ways where you can start to check for that. Right now, it's a manual check. Over time, we're going to build a lot of AI into this. It'll just alert you, hey, by the way, this director is already a director in one of your other customers. And then, of course, you can do your reference checking, call the customer, put in your notes, and fundamentally, at the end of the day, you can finalize the application. You can choose to approve, reject, or cancel. And if you approve it, it'll then create the customer into your ERP. All right. So, if you think about this is the first step in the best practice AR process.
AJ, from my point of view, having sat in that chair as well, it's a very laborious process if you do it manually, because this way people are already pre-populating all that information. It's basically like a web store for credit applications. The customers they want credit, so they're going to type in all the information that they need on this interactive form. It comes back to you. It's pre-populated, and even getting the credit report. I'm sure a lot of you will going back a few years to get a credit report that you had to fax someone or you had to call someone and you had to send some forms in. So you then had to sit down for ages off the little fax report that you got and populate all that. This is all done automatically for you. So the front end time to actually onboard a new customer. And again, we were all under pressure for the salespeople, right? They've come in, they've got an order, they're desperate. This guy has to have credit by 5 o'clock this afternoon, otherwise we can't ship it. So this just truncates the time taken really all the way down, so you can get people onboarded very quickly, but using the data to make sure that they're a good credit risk.
And the one I want to mention to you as well, which is very much linked to the same to the same concept of scoring, is once you have the customer on board, and JB's example was like really good, 3 months later, 6 months later, they keep delaying payment. You can't forget about the customer. You can't think, I've done a score check once and that's fine at the start, right? Best practice AR onboarding also means continual monitoring of your customers. So in most businesses, and Mike, you probably look at your business this way. You look at it from a aging point of view. Which are my customers who are current, who are 30 days overdue, who are 60 days overdue? But one thing I would encourage you to do, all of you in a business, is look at your customers from a risk point of view, right? Because that's a whole different angle. So what we built through here is a way for you to, again, we sync automatically. We know your customers' ABNs. So we match your ABNs with the scores that we have and how they're paying you in your system. And we give you these categories of risk, right? So if you have your AR team that's calling customers, right, that's fine. But now they can call customers. And I believe actually, Mike, you are actually using this in your business. You can call them based on risk. And you can say, look, these customers, I should prioritize collection because, and why you would prioritize it, we explain it at the bottom here, but it means fundamentally they're paying the market on time, but for some reason they're paying you later, right? So the fact is, why they're paying you later, is it because maybe they think you are not a key supplier? Maybe it's a fact that you have not been chasing them very much, so they feel they can delay payment. So then you can go and look at those customers in like any of these groups, and then you can take action. You can do a bulk email to them. You can do a bulk SMS. You can set up a call task. You can add them to monitoring. So monitoring is a service where if you're worried about the risk of the customer, you will get alerts sent to you. Like, okay, there's a change of directors, or there's been a adverse event on their credit file. It'll send you a sort of update. So you can see in this example, they're paying the market on time, which is the late payment and failure risk, but they're paying you fairly late. So what's the reason? What is happening here? Right. So this is just more information, more like data that helps you make better decisions. So let's flick back. Since I have control, GB, I'll just continue on this slide deck if you like, and we can then hand over back to you, GB, to talk about number 2.
Just hold the slide deck there. So that gives you a sense of how at the front end you could save yourself an awful lot of pain and angst going forward, because if you can get this right and you bring on the better customers. Now that's not to say that you shouldn't still sell to people, but if you've worked out that they are a higher risk, then you can give them shorter terms, or you can give them a smaller credit limit, or you can make the first 3 or 4 transactions payment up front and then see how they go. The next part of the puzzle is Humanized Collections. And when we talk about Humanized Collections, you can't get away from having a relationship with people to ensure that you know who to communicate with and the messages that you're sending. But the workflow process will show you how to automate a lot of that and to interject the humanized part. Now, we actually tell you that you can reduce your overdue accounts by 70% in the first 3, and by 90% in the first 3 months, but people don't believe us, so we say 70%, but it's actually the evidence across collections with our customers show that you will reduce your overdues by over 90% within the first 3. But as I said, we do it with 70. And again, it takes a lot of the stresses and the pressures and the remembering. But also the important thing too is a lot of people only chase big outstandings. They don't follow up on the small outstandings. So you'd be surprised. And again, I've worked in a lot of places where I go in and try to get their book down, and they might have 350,000 over 60 days. And 250,000 of it will be in big amounts, and everybody wants to chase those. But there's $100,000 sitting in people that owe them 800 and 250 and 1,120 and all these small amounts, but they quickly add up. So, AJ, if I pass it back to you, we can now look at how the workflow works to humanize this and to give you a process that makes life a lot easier in making sure that you're collecting from everybody, not just big people.
Yeah, I mean, the whole human element of collections is, look, you can automate certain tasks, and that is important to give you the efficiencies. But you need to also factor in that most businesses already have an accounts team, and they do a great job of talking to customers. They have that personal relationship. But how do you fine tune that to be even more effective? How do you ensure that you give them the tools to really shine? Like salespeople have CRMs, right? Accounts people are often running in the dark. So think of this workflow as a CRM for your accounts or your finance or your credit teams, right? And they can basically take this workflow and really tailor it to suit your business needs. And it's really like a set and forget kind of system. So if you think about it, when you first raise the invoice in your ERP, the system can kick in then, EasyCollect can kick in and say, look, you know what, let's send copies of invoices straight away in case they weren't sent. Because, you know, often that's a number one excuse for not getting payment, or I didn't get a copy of the invoice, right? Once the due date approaches, you can start to send pre-reminders to the customers. Again, so you don't need to do anything manually. It's a set and forget system. And then post due, right, the system then can kick into this like workflow process where we can send different types of communication. We can send emails, SMSs, faxes, phone calls, and actual mail, physical letters by post as well, right? And when you set up these templates, it's like a one-time setup. You can drag and drop fields across from the right-hand side. These fields are what we call smart fields. So they pick up data from your ERP, like from MyOb directly. And so when your customer gets it, it actually looks very personalized, and it comes from your own email address. It doesn't come from like EasyCollect. And with a tick of a button, you can attach overdue invoices, attach statements, just so that there's no excuses for why they can't pay you, right? And this humanized collection process that I'm showing you is fine, because what happens is, what we find, the first two steps, assume there's an email and an SMS, and it's like, say, 5 days and 4 days apart. What you find is that the numbers were roughly, I think it's 30% of customers pay on the first two reminders. These are customers who are probably good customers. You don't need to chase. You don't need to spend time chasing them. So again, you can be more efficient by just automating that. But it's this balance 70% that if you keep sending emails and SMSs, you're not going to get a very large improvement. And that's where we talk about humanized collections, right? Having that phone call is critical, because a call is where you can connect to your customer. You need to do those things. And if you guys been working with Stratus, you probably know Wendy. Wendy calls you. She uses EasyCollect, and she's calling you when the system says, hey, you haven't paid. I'm sure if you're on the call, haven't heard from Wendy, because you always pay your bills on time, right? But if you have heard from Wendy, it's because the system said, okay, Wendy, time to call these customers. So it actually sets up a calling list for Wendy. I'm using Wendy as an example, but for anyone who's doing the chasing of who they need to call in that particular day, week, or month, right? Now, by the way, if someone does pay on time, the system can send a thank you message as well, which is a really nice thing to do to acknowledge the fact that customers have paid their bill. But coming back to the calling tasks, now when I'm calling, I might be really busy. I can call people who are really overdue, so I can sort all these columns, or I can also look at the risk level and say I'll only call customers who are maybe really high risk because I don't have too much time. So let's say I want to call Casper. I can go into that account and I can see for Casper, Rowe, and Bartoli, Teti, I can't even say that. We've got, this is what's already happened in the workflow, up to the 6th step, which is a phone call step. I can complete the call in a second, but I can see the history of what's already happened. I can see that they've viewed the statement, so we're tracking you. We know if you opened your emails. We can look at the risk of the customer, and we can see the open invoices in MYB or XO or advanced, I should say. We can see what invoices are open and the contact information. So now this is my central place to come in here. I can complete my phone call. I can put in my notes, spoke to Mike Pendred. Mike said he would pay tomorrow, I think he is having me on, right? And I click save. Those notes get saved, and then I can even send an email to confirm my phone call, and I send that email as well. I can, of course, change all that up as well. And what you have is any of my call notes is also saved in here as well. So whatever I said will be saved as well. And
AJ, if I could just interject there, that's look, even if you're not using EasyCollect, just as a little bit of a tip, that's very important, is to always confirm back by an email a promise that someone's made you. Now, EasyCollect makes that really easy because you can format the email straight away and it just sends it out. But even if you're not using EasyCollect, if someone says to you, look, I'll give you $1,000 a week for the next 3 weeks, by confirming it back in an email, it confirms that promise, and psychologically people are more inclined to then adhere to that because you've reminded them of that's what they've promised you. But EasyCollect, of course, just automates that for you while you're making the notes and sends the email out. And that, again, gives you far more efficacy in collecting money.
Right. And if you have any questions, by the way, as we go through this, please just feel free to use the chat on the bottom of the Zoom or the Q&A section, and we can answer that as we go through. But the other thing is, if a customer promised to pay you in, say, 2 weeks' time, you can set up an action such as, look, I'm going to pause this customer for a couple of weeks because they promised to pay me in 2 weeks' time, and I'll just say promise to pay, right? That promise to pay, I can hit pause, and what that does, it'll stop chasing that customer till the 28th of May, right? Because that's the promise that it's made. That it's been made to them. That, and so it's also humanizing it. It's not like, hey, you promised to pay me in 2 weeks, and the system that sends out the automated communication the next day anyway. No, the system will understand that that's happened. But what will happen is on the 29th of May, it'll check, has the customer paid. It'll kind of, because we always have a live sync to your ERP. It'll check the ERP. It's still a balance owing. Okay, it'll unpause and start chasing again. So it's also automating it for you, but it's giving you that human touch, right? So that's kind of point 2 of this webinar. I know we only have 40 minutes, so we're trying to get through it. So that was point 2. And back to you, GB.
Yep. So the next part is to actually make it easy for people to pay you, because we've found, and again by looking at the transaction records, that nearly 25% of people pay after 5 o'clock at night and before 7 o'clock in the morning. So unless you've got staff on deck between 5 at night and 7 in the morning to take a phone call or respond to a correspondence to make it easy for them to pay. And this again is modern times as well. People have, they get home, they start to cook dinner, they get their kids sorted out, they get themselves sorted out, and then they think at 9 o'clock at night, oh, I promised to pay Stratos. I know I told Wendy today that I was going to pay her that outstanding invoice of 4,800. Oh, Wendy's not available. Oh, so we need an ability to make it easy to pay people, and believe it or not, EasyCollect comes with just such an easiness.
So this easiness to pay, as we're talking about, is really about taking away those barriers to payment. And it's in the simplest way, I would say to you, it's about adding a pay now button to your MYB invoices, your MYB sales orders, to your reminders, right? So we can help you fulfill those parts of it. But it's not just about adding the pay now, it's having the pay now that does something that actually helps you to get paid faster. So to give you an example, I'll just show you one use case, which is a use case where you can add a pay now button to your reminders that get sent through EasyCollect. Now that can be also added to the bottom of your invoice in MYB. So, if we need that sort of clarity report to be edited and add the pay now button, the guys at, Stratus can actually do that. But it's all about making sure that we can give your customers lots of ways to pay you, right? So if I click this pay now button, again, I've sorted my kids out, as GB said, and I'm ready to pay that bill to Wendy. I click the pay now button. And what I'm coming into now is seeing a live view of my supplier's ERP and what I owe them in their system. So this is a view. This is me, the customer, and this is the supplier. So this is an accounts payable kind of situation now, where I can pay all these invoices. If it was a one-off payment for a deposit, I can do that as well, right? So I can pay a deposit for any amount that I want. I can see the payment history of what's already happened. I can grab my statements here as well. So all my statements are actually stored from all the stuff that's been sent by my supplier. And I can come in here and say, you know what, I want to pay these invoices for, let's say, $1,000, right? And I can go ahead and pay that today by credit card right now, right? If I click pay now by the credit card, what that does, it actually takes me to the credit card screen. I can put in my email, so that means I'll get a receipt automatically. So that means that Wendy doesn't have to send a receipt to you manually, it's automated. I can put in my card number. And what I'm doing here is I can put in any card, Visa, Mastercard, Amex, and it actually sets up the rules behind the scenes. So you can choose to surcharge the credit card fees to your customers, or you can absorb some of it. It's really up to you, right? So that's, it's a small thing, but it's actually a massive thing for a lot of our clients. They want to have control of the fees. And then super importantly, it'll write the payment back into your ERP once the payment's made. So it closes off that invoice, or it marks it as paid, and then the reconciliation process runs separately, and then they will then close it off completely. But again, a lot of customers say they don't want to accept Amex. GB, would you not accept Amex in your business?
No, I would surcharge the fees for Amex, most definitely, because fees for Amex are usually a point higher than everything else. But you would be amazed about the number of business owners, especially SMEs, that pay by especially Amex, to accumulate points. So they never pay for any travel, and they go away with their wives to an exotic holiday once a year. Well, basically to Queensland or WA or New South Wales. There's no exotic holidays outside the bubble. Or maybe, oh, sorry, you can go to Auckland for a couple of weeks. There you go, knock yourselves out. But they use it for points. So never put barriers in the way of people paying you. And by saying no to Amex, now look, I admit, maybe 10 years ago, Amex was a living hell to deal with. You had to send things up to them. It took you days and days and days to get paid. But Amex have had to be a lot more competitive in today's market. So they act just like any other bank, except they're more expensive. But if you automatically surcharge, then there's not a problem. AJ, if I could just make one other point too, again, and you guys sitting in this webinar, if you're in the AR space or in the accounting space, you'll all know this. And you know, we've all got a number of reasons why we can't pay. And the first one is, I didn't get that invoice. Oh, there's a problem with that invoice, or that invoice isn't in my system yet. But EasyCollect allows them, and let's assume that that is genuine, that someone looks at this list and goes, oh, that's interesting. I've got 8 invoices here. I've never seen this one for $8,530 at the top. You can, and it's 9 o'clock at night. So usually what they do is they'd email you, and that buys them a few more days. This way they can just click view or download and immediately see the details of that invoice to go, oh, yes, I did get those goods. That does need to be paid. So again, it truncates the amount of time or excuses that people have. And the classic one is always, I haven't got that invoice, or, oh no, that's on Janine's desk, there's a problem with it. But they don't tell you that for the first 60 days. So it's important to be able to give people information at their fingertips, and then again, remove the barriers to them paying it. Sorry, AJ,
Yep.
Carry on.
No, spot on, right? And again, if you have any questions how it works, let us know. And we want to introduce a buy now, pay later solution. So if you have shares in Afterpay or Zip, you'll like this. This is us basically offering B2B. So we're giving your customers at the time of the payment a way to split that $1,000 in this example over 5 installments, right? For a fee of $11.55, right? As you can kind of work that out. So it's not a massive fee either. And what that does, it allows them to pay a finance company, like a Zip or an Afterpay or one of those guys who we've got in the background, the actual installments, but you get paid the full amount straight away. So because you are our client, we want you to get paid up front. So we make sure you get paid up front, and then your customer enters into an arrangement with a finance company, and you have no risk on that. So if they don't pay the finance company back, it's not your problem. It's between the customer and the finance company. And it's a real-time assessment of risk. So we assess the risk on a real-time basis. So we don't just simply kind of say, look, here is the go offline and fill out 4 or 5 forms. We say, here you are. Here are your 5 installments. Here's how much is each installment amount, and pay, and that's it. So it's a very simple process, right? To actually, for a business to actually use this. Now, this is one use case that we just have taken you through. There's a number of different use cases. You can have it on your invoices, on your sales orders, on your website, on your e-commerce stores. But what we're trying to show you is doing these things is going to help you run a better business, right? So I'll just start walking through this, GB, and then you can just add if you like. So look, basically, having a good onboarding process is going to help you mitigate risks of working with the wrong type of customers. And more importantly, I think anticipate future bad debts and make sure you reduce those. This is GB's stat that he shared with you earlier. If you follow this process that we've shown you, we can give you a money back guarantee, right? That you will reduce your overdue collections, right? Within 3 months of using EasyCollect. It's on our website. We believe in what we are selling, and whether you use EasyCollect or not, to be honest, it's something which you should think about in terms of onboarding or the way you collect. It's just have these 3 steps in place. And at the end of the day, payments is about helping your customers be more efficient in paying you, reducing those barriers to late payment. And at the end of the way, when you get cash in the bank and you see that money coming in, it means you have less stress and you can focus on growing your business and enjoying what you do. So GB, I'll let you close it off if you like.
Okay, well, just before we do that, thank you all for attending today. There's a couple of questions that have come up, which I'll just go through quickly. The first is, thank you for this, is how long does it take to implement EasyCollect into XO or Advanced? I'll answer that one, AJ. It usually takes under 14 days. If you call me this afternoon and you wanted it by tomorrow afternoon, I'll get it done for you. I'll be very, very unpopular with the implementation team, but hey, I look after the partner channel first. So if you're a customer of Michael's, we'll get it done. But usually if you allow 14 days. It uses the API, so we need to talk to XO, we need to talk to Advanced, because the ERP is the source of truth, so that's where we get all the information from. So once a payment is made, once a credit note's raised, we can, that all flows through to EasyCollect. The second question is, what are the fees for credit card payments? Look, we have a base fee, but it is depending on volume. It's anywhere between 1.5% to 1.75% for Visa and MasterCard, plus a transaction fee. But if you're transacting, far greater amounts of credit cards, we can always go to the provider and we can negotiate a better rate for you. But if you just want this as an option to not provide a barrier, then they're the rates. Okay, so if you haven't already, you will get your link to the 3 free credit scores for attending this webinar, and but I wouldn't be a channel manager unless I had some steak knives in my drawer. So for those of you who attended today, there is a 50% discount for the first 3 months subscription and a fixed installation of training price. Now, normally implementation and training is around $2,500, so it's a fixed price of $995, and that's available to the end of May. Now, you can either reach out to Michael or reach out to me, and if you wanted to set up a demonstration to get a little bit more tailored approach to your problems, your outstandings, and how we can look at this in more depth for you. If you wanted to look at payments specifically, or risk specifically, or workflow specifically, or the whole 3, we can set up a more detailed demo, because I know all we've done. What we've tried to do today is give you information on how you can be better in receivables. Whether or not you use EasyCollect, that's just a brilliant tool. I mean, I just wished I'd had this when I was in AR, because it would have I could have, don't tell the bosses this, but I could have probably gone home at 2 o'clock every day and I'd have done my job and I'd have looked fantastic, because I wouldn't have had any overdues, and I'd have gone, look at me, I'm a winner, rather than sitting there stressing on how I'm going to get that guy to pay his $35,000 that's in the 60-day column, because we need it for cash flow. So I just wish I'd have had this. It would have made life so much easier for me. And you, AJ, and your business, right?
Yeah. GB, you've got another question as well that's come through. If there's a minimum size of debtors to make it worthwhile having EasyCollect. I'll have a go at answering this at the start, and then maybe GB, you can end that. You can have your things. Look, I think it depends, right? What is your current resources in your business? If you have someone already employed full time, then this helps them be more efficient. They can do more in your business. If you don't have someone full time and you're looking for a product, this can supplement that. Typically, if you think about it, let's just go with something like a smallish business has got, say, 20 to 30 debtors that they're working with. Each debtor has 3 or 4 invoices a month. That's 60 invoices, right? To 60 to maybe 80 invoices a month. It's fine for the first month, but then what happens is customers say, hey, call back on Wednesday, or call back next week, I'm away. And then if they don't pay in that month, the following month, you've got some left over from the previous month, and you've got all these new invoices again. So you've got another 80 invoices plus the 20 from the previous month. So I think it's a compounding effect of efficiency, where it's not so much about so I'm going to end by saying this. It depends on the fact that the nature of your business, and are you still getting paid late? Do you have the stress of thinking, am I getting money in my bank? Am I worried about the risk of not getting paid? If those things are a yes, then I'd say it's a yes. If it's a no, then it's not a fit for you, because then you don't probably have the same pain and it's harder to like justify the expense of EasyCollect. Jimmy, you can add your thoughts there if you like.
Look, I will. I used to work in a space in a consultancy, and we had probably 40 or 50 debtors, and I would spend probably 2 to 2.5 days a week just chasing those debtors because they were all big invoice debtors. So you didn't send, you know, you've got two sides of a coin. You might have 1,000 debtors, but your average invoice value might be $200 or $300. You might have 50 debtors and your average invoice value might be $5,000 or $6,000. Quite often, it's a lot easier to get $300 and $400 and $500 payments than it is $3,000, $400 and $5,000. So I would say if you've got 50 debtors, but they're all large invoices, EasyCollect, the investment in EasyCollect will far outweigh, will far give you huge benefits, because chasing those people up takes a disproportionate amount of time because they're usually all overdue because they're big ticket. So does that make sense, everybody?
Yeah, I tend to agree with what the guys are saying. It's probably a combination of two things. If you've got a lot of transactions and they're potentially smaller number, but there's a lot of them, and you're dealing with a lot of customers, then obviously I think the solution's an absolute no-brainer. But on the flip side, if you've then large debts and it might not represent, it might not represent a high volume of physical invoices, but there's some large debts, then I think it's a wonderful, wonderful tool. And it's also it's just making a process that people don't like to do manageable. And I think that's something that a lot of people do. If you've got someone and they've got two things to do in the day, and one of them is chasing debt, guess what? Chances are they'll pick the other one to do first. So it's just building an automated process. I know in our business, our average debtor days came down dramatically. Our cash flow improved dramatically, and our clients recognize that. And the simple fact is, the squeaky wheel gets the oil. You know, if your clients get a message from you on the third day or fourth day after the due date, and they know that happens every month or every week, they'll pay you because they don't like getting those messages. So it's just getting you into that upper bracket, that upper echelon, with your customers and making sure that they pay you on time.
Yeah.
Thank you, Mike.
Couldn't have said it better, Michael.
Thanks, Graham.
Okay. All right. So look, I think that's GB, if you want to close it off. Thank you.
Yes, once again, thank you all for coming today. We really appreciate, we know everybody's time poor, and investing in this webinar has been, I hope, beneficial for you, and you get some take out of it. We'll send you the link for the credit scores and the offers there. So please reach out to myself or Michael. And once again, thank you for coming. Thank you, Michael, for hosting this. We appreciate it, and we'll talk to you all soon. Thank you.